Welcome to Point Blank. This is your host, Panama Crypto. Today, our guest is Jack, or better known as BTC Jack Sparrow. Jack is a software engineer and a mighty good trader and market analyst. Welcome, Jack. Very happy to have you on Point Blank.
What's up, Panama TJ? How are you doing? Thanks for having me. You've been asking me for a while. I'm really happy we're doing this now.
Let's get going. Who is Bitcoin Jack?
Who's Bitcoin Jack? I came across the trading space in 2017 after getting familiar with Ethereum and Bitcoin. And from there, I kind of stumbled upon a couple of groups that I started to learn from people who were in a space maybe not much longer than me, but definitely knew more than me and could point me into the right directions. And after the whole craze of 2017 and early 2018, where everyone was a genius, I ended up making and then losing such a large portion of my gains again that I really wanted to learn and understand how markets work. And it's kind of like how I generally, once I get kind of almost obsessive and addicted to things, I really want to dive into the deepest details of how things work. So I kind of guess from there on, I was working with people from Bovado. It was a crazy time. I learned a lot there. But eventually I moved on and just kept sharing my somewhat not so conventional ideas and approaches to the market with Twitter. I really love to share my research in a way that it kind of sparks a kind of a bit of a discussion. And yet at the end of the day, I think, if you can share, you should share. I think it makes the world a better place. So that's really what I'm trying to do. And I don't have any paid groups. I don't have any products to sell anyone. And to be honest, it would also be back in the day when I was lead analyst for Bravado, it was a really distracting thing too. My trading improved so much ever since I stopped doing that and really started to focus just on my own trading, not feeling responsible for anyone else but myself and my own portfolio. So, that's Bitcoin Jack. I love Ethereum every now and then once it starts to rally or when I think it rallies. So you'll see me on Twitter sometimes with the name Ethereum Jack, and that's probably because I hope, I want to go and see Ethereum go up. I think that's kind of a little short story about me.
You should change your name to Jack Bitcoin Ethereum or something like that. So you don't deceive your followers. Because you have in your handle BTC Jack Sparrow and the nickname itself is Ethereum Jack. It's a bit curious. Yeah. I haven't seen anybody have a handle like that.
Yeah, it's interesting. It will change back to Bitcoin Jack or Fiat Jack or whatever kind of Jack I feel like at the time.
What about Ripple Jack?
I kind of hate that shitcoin to be honest. But if I do think there's gonna be upside and I can position myself for it, I'll try to catch it. It just the pumps are somewhat unpredictable at times. So you really want to wait for confirmation on that thing. And then sometimes it just pumps without you. Seriously, that thing has done these crazy pumps out of the blue. You could argue that it was time, but you could argue that the week before that and the week before that and the week before that it could have happened to you. So it's a very unnatural coin. And I do think it's partially related because there's a bunch of ripples that's constantly being pushed into the circulation. And I know right now it's not so much, it's not getting diluted so much, but there's definitely it's definitely not an entirely honest and free open market. That's the way I see it, and probably other people won't agree with me, but that's fine. We can agree to disagree on that. But I just don't like Ripple. It's made by a company that obviously is looking to profit of an illegal security sale, and they're probably going to be able to pull it off without being deemed a security, which is the funniest part, as they will pay for their lawyers, as they have already with the funds they raise from an illegal security sale. So they probably get deemed a commodity by doing an illegal security sale, just by having really, really, really good lawyers.
One of the first few trades I did in 2017 and did a couple X's was Ripple, so I can't take that away from them.
I mean, I did too. Like I had like, I think Ripple was part of my portfolio until like late 2017, and I may have gotten a few backs in between. But generally, if it pumps or if it dumps, I don't know. Like I really try to focus on Bitcoin, Ethereum, maybe some other majors in general, and until like moments like these where there's like alt season. But what I do find is that it's so much easier to focus on a few single markets, because you really understand the markets better, and the players and everyone involved, which at the end of the day makes you a better analyst to judge the different moving parts in a market. And that is like literally that little bit of an edge outside of simply looking at a chart, that could be the edge that makes you win or lose. I think at the end of the day, a lot of markets you can look at charts, and charts do tell a lot, but knowing and understanding the ecosystem of the specific coin you're trading, just like with FX, like you focus, it's always better to focus on one market, or a few markets, understanding what days of the week are generally statistically doing behavior A, B, or C, or if an event happens in the world, you kind of know generally what kind of effect it will have on the asset you're trading. And I think that the same goes for like there's people who focus on altcoins and they understand exactly how these pumps get fabricated. There's people who focus on Bitcoin because they understand how Bitcoin generally loves to trade, and there's people who get wrecked by trading Bitcoin because they're not focusing enough on those details.
Getting back to the Jack topic, can you tell us about your experience and background as software engineer?
I mean, I can tell a few things, but I kind of like to keep my real life as private as possible. It makes sense to keep some kind of like that to myself. But I started out programming when I had the age of 14, and I was also still learning English back at the time, and I was just very fascinated by online games, and kind of got into private servers of various um, shooters and RPGs, and it was just a lot of fun creating like alternate versions of these games that I used to play as they went to shit, kind of reviving them. And it was a lot of, I don't know, exploring my way through that. And I never thought I would end up becoming a software engineer. Actually, it was just fun back then. I was just playing around. Um, and as I thought I wanted to become a psychologist, my mom told me that I shouldn't, because she thought that it would kind of drag me down. I would probably end up analyzing everyone and having an opinion on everyone's psyche and whatever. So I kind of took that advice too hard, and then I started to look for something more scientific. So I ended up like doing computer science, and then I became a dropout, because I was 3 years in. I kind of like did a bunch of courses that I enjoyed very much, and then there was this whole bunch of courses that didn't speak to me and had content that I thought that I would probably never apply within my interests within computer science. So I dropped out, having the idea to start a company, and my parents went batshit crazy on me. They were like, You did 3 years, you're almost finished. And if you want to go work after that or do a master's degree, by all means do so. But quitting now just doesn't make sense, they said to me. And I just couldn't motivate myself anymore. And I told them, like, okay, well, this is it. So I ended up dropping out, started up a software company. And the same software company still exists today, which is like, it's ran by other people, but I still have like royalties on it. And in between, as I dropped my workload there, I had some other avenues of entrepreneurship, some a little bit more successful, mostly not so successful, but I learned a lot. And then I came across Bitcoin and Ethereum, and I realized that's probably what I wanted to spend my time on. And during that entire process, like, I've been programming, using my programming background to create my own automated trading environment and analysis tools. And it's aside from that, my whole drag into Bitcoin has also really incentivized me to learn things about the economy and how the world kind of goes around, which I think is incredibly fascinating once you like put time into understanding what moves and incentivize this world. And it's kind of funny to see how nothing is what it seems. So I think that's a good summary on my experience and background as a software engineer, because I don't want to go into too much detail on what exactly I did, because you have my face, but I kind of like to keep my identity as low profile as possible.
How do you get going an AI trading system? How does that get done in terms of systems architecture? How do you go about it if someone that is a computer scientist or a software engineer could start doing that?
The most logical way to start out is to start trading and start playing, like create a little data analysis tool that kind of like scrapes just simply the price and volume information, or per trade information from exchanges, and just start out with simple indicators, not AI, not nothing, just understand what drives markets, what components of the market do what. And from there on, once you get a better understanding of that, you can try and start feeding AI algorithms. But what I found with AI is that it's like real AI, it's incredibly difficult because you can't see what's going on inside the algorithm. You give it input, it starts learning, and then it gives output. You don't know exactly what happens or how it learned or whatever. So what I use AI mostly for is just to give probabilities and understandings of certain data, and then use that as in algorithms that what I call is shallow AI, which is a very straightforward conditional algorithm that just looks at the data and the probabilities that derive from AI, with very specific boundaries of how that specific action can be traded. And then after that, it's important to realize that algorithms will perform well and they will perform shit, because you literally teach them one thing, and if there is something in the market that changes and you didn't account for it, you're probably going to have a shit time trading that specific strategy. What it does mean is that there's going to be periods where an algorithm is going to flourish, and there's periods where an algorithm is going to have very bad results. And you kind of have to accept that, because you can start like optimizing an algorithm in periods where it's performing bad, and the odds that you're going to hurt its performance in the periods when it's going to perform well, it's high. It's like so you have to kind of find a way to diversify multiple strategies and kind of create a system where you understand in which market environments each algorithm performs better, and make sure that these, when they do well, they take more profit, and once they start doing less, like once they start performing like shit, that they are allocated less within your portfolio to trade with. So it's, I think at the end of the day, for me, when I started programming indicators or just simple scripts to analyze or create signals, it's just starting. Just download an existing bot framework or write your own little framework, implement an exchange API, download the historic information available, preferably using proxies with a few thousand IP, so you can pull and circumvent the rate limits of the exchange. So you can pull, like, I don't know, like a couple of years of data within a few minutes, and then just start playing around with it. And it's a giant puzzle, and eventually things make sense or they don't. You're probably gonna do it a few times, think you found holy grail, fall, stand up again, do it again, break your nose. It's very much like trading, and you're trying to kind of translate your trading methodology into a language that a computer understands. And what I found is that you got to start to learn to think more as a computer, instead of like directly translating your knowledge and your skills as a trader, how you manually trade, into a computer, and instead use the power of a computer to kind of help you to figure out correlations and IDs based on the data you have, and based from there, let the computer do its thing instead of having your own opinion. So you got to let the computer just, learn, and use the computer to help you learn what the computer can see.
Is this something that you will monetize or commercialize?
I don't think so. Well, maybe, but not as a commercial, like a user focused consumer app or anything. Because I sincerely believe that if you have algorithms that work well, you don't want to go out there and sell them on a subscription fixed fee basis. There is detrimental effects to the efficiency and the returns of your algorithm as they start trading more volume. So if you have an edge in the market based on an algorithm, and you're going to give 1,000 people a copy for $100, like, while I can maybe trade millions of weekly revenue in it, making, I don't know, 10-20% on a monthly basis, you can do the math, but it just doesn't make sense to give that to other people for a fixed fee basis.
I guess there's no point of giving out your edge to people in general.
I mean, if they pay you well enough and you have enough volume to saturate it, outside of your own volume, let's say you have an algorithm that can that can cater to a portfolio worth, I don't know, 30 million, and you only have or are willing to risk 1 million, for example, then you have 29 million left. And if you can charge based on performance on that, and that 30 million, I don't know, makes 10% a month, or 15 or 20% a month, and you can charge 25% of the profit on that, you're obviously going to make more money a lot faster doing it that way. But if your saturation levels are way lower, and you can charge on performance, then it just doesn't make sense. And if you want to charge on performance, you're gonna have to go through all these kind of regulatory hoops. And the easiest way eventually to do it, with, at least in the Netherlands, the least regulatory hurdles, is to create a private fund that's not tradable, with a limited amount of money. I think you can still put a lot of money in it, and then you can charge your performance fee, etc. So if anything happens in the future regarding my algorithms, it's going to be something. It's going to be something like that. It's going to be something with me running a fund and partially have it automatically traded and do some manual management around that. But for that, I want to be, at a point where I at least have 1 year of track record, preferably at least 18 months of track record of those specific algorithms to, to be even taken serious by people who want to go into a high risk profile kind of fund like that.
I'll be down to put some money on your fund, man. That is a start.
I mean, I think I'll get it filled if I decide to do it, and it makes sense to start it eventually. I'm in no rush, but I've been exploring the regulatory framework to be able to do it, and I mean, it would also feel like a major accomplishment considering the amount of time I've been in the space, which is only approximately 3 years now. But I want to do it with proper guidance from people with way more experience than I have, who are willing to help me set it up and people who I can trust. So I have a few people lined up and I'm still exploring things and I'm not in a rush. I think these things should be done the right way instead of rushed. So, there's always going to be opportunities. And in the meanwhile, my algorithms are trading for me. So, and I'm trading myself. So I'm happy where I'm at and I have ideas for the future, but we'll see how, where that ends up.
I'm excited for you.
Thanks, man.
Besides your AI algos and whatnot, you use many indicators and styles on your charts that you share on Crypto Twitter. Which is your most used to actually trade and why?
I mean, it's always a accumulation of multiple things. At the very basis, it's always going to be price action because naked price action will be the best, in my opinion, is the best way to enter and exit risk-defined trades. It's a good way to find your entries. But for me to decide to enter a market, I need to form my bias. And there's people who form their bias based solely upon price action. But I do think that on higher time frames, especially in higher time frames, things like alleyway theory, Wyckoff, Gann, on-chain analysis, off-chain analysis, game theory, everything combined kind of leads to that bias. And when it's not obvious, it's not obvious. So then, we're probably in a non-directional market or we're in a trending market, which is not about, that either you're in it or you're not in it. And then you just got to wait until there is an obvious moment where you have a bias that allows you to enter that market. So bottom line, price action is king to manage your risk and find your entries. And then I use a bunch of things together with like a little scoring formula, and it's also a little bit of gut feeling. I do have like a framework with specified rules, but at the end of the day, the price action concepts I have are strong enough to take the trades, and then I use the rest to create the bias, location in time, location in price, to filter and then find these entries. So I think that's key. So you really want to, in trading, you want to know where and when you should be paying attention. And I think price action doesn't really address the concept of time too much. And I think time is incredibly important in trading. So price action at the basis, and then build on Wyckoff, alleyway theory, Gann, the other things I mentioned is kind of how it all fits together at the end of the day.
This episode is brought to you by PrimeXBT, the exchange that makes possible to trade with leverage on legacy markets from a single Bitcoin-based account. Can you explain to us how Gann is not bullshit?
I understand why Gann is perceived as bullshit, because the majority of the things you'll see are people using and applying tools related to Gann without understanding how Gann arrived at these tools. It's like using a product without reading the manual. So basically, when people use a product without the manual, they just go trial and error and find a useful application for a tool and then think like, okay, this is how it works. But then they can't really explain why, because they just found a correlation. But the bottom line of Gann, and this is much more a philosophical thing, which then later on translates to a market perception, is that everything moves in cycles, and everything is a vibration which has a past, which is like the cause, as with the Big Bang, and then everything has a present, and then the present has a new input, which kind of forms how a cycle progresses and enters new phases and sends to a new cycle. And pretty much every natural process in the universe or on Earth exhibits components of fractal growth and pretty much governed by the golden ratio. And Gann kind of theorizes that the past, the present, and the future, or the past, the present, and the input right now, is kind of like how everything in nature has a positive, a negative, and a neutral force. So an atom has protons, neutrons, electrons, for example. And this kind of, what he says is that every fractal, once you zoom in, kind of looks different, but when you zoom out, it kind of like you'll see patterns emerge. It's just like, trading patterns. You'll see patterns emerge. And what he says, it's up to you to figure out which part is the positive, the negative, and the neutral, and they'll follow each other up. And once they're all combined, you'll have this kind of like cohesive structure that's ready for a next cycle, and then the new input will define the next cycle. And this is interesting because that is by itself, it's geometry, and geometry explains the math basis of this fractal growth and these cycles. And then I want to jump to the part where Gann actually really becomes interesting, because, for example, Elliott wave theory also talks about ratios in time and ratios in price of the heavily correlated to fractions of the golden ratio. So that's nothing new by itself if you're familiar with Elliott wave theory. But where Gann then ends up trying to explain is that a lot of cycles on Earth are correlated to whatever happens around us. And a very simple example is the sun, moon, Earth cycle. The sun and the moon, they cause tidal waves. The female period is synced with the moon cycle. This is a correlation, and we don't know whether it's causation, but it's just a statistic. And then, for example, we have the solar cycle, and this is where it kind of like becomes interesting, because there's this theory by German scientists, researchers in 2019, that kind of created this model, this physics model, that shows how the solar cycle, which means that over a period of 11 years, there's going to be more solar activity, so more electromagnetic particles coming from the sun, and then within that 11 years period is going to be at a high, at a low, at a high again. And they correlate it to Venus, Jupiter, and Mars being aligned every 11 years. And within the physics model they created, they can show how the alignment, the gravity of Venus, Jupiter, and Mars being aligned is possible to cause enough of a disruption in the surface tension of the sun to cause a higher or lower degree of sunspots, which are kind of like black spots on the sun, which eventually end up becoming these kind of explosions on the Earth, on the surface of the sun, which then shoot out all these electromagnetic particles into space. And the Earth has an electromagnetic field which captures these particles. And when we see the northern light, the aurora, the green light that you'll see at the North Pole and the South Pole, is these particles hitting the Earth's atmosphere. And looking at that, we can find correlations, for example, with a higher degree of severe earthquakes in periods there is more sunspot activity. And we know that this also influences very mildly, but it's a correlation again. It influences the Earth's temperature. So in periods that the solar cycle is at its top, so we're receiving a lot of electromagnetic particles, we can see that on average the Earth is warming up slightly, like 0.1 degrees or something, which makes sense because we're adding energy, we're adding mass to we're adding whatever to the Earth's ecosystem by capturing these particles into the electromagnetic field of the Earth. So whether this is correlation, causation, whatever, it kind of shows how astronomical events have influence on whatever happens on Earth. And this is this very foundation of where Gann kind of tries to find correlations within markets. And it kind of also answers why some of the geometry Gann used works, because the movement of these planets in our solar cycle, it's all geometry. It's circles or like close, almost circles. Some are like slightly oval, but they're circles. And the relative positions against each other then start moving in very predictable, repeatable, cyclic patterns. You know, we move around the sun in 1 year, and all these other planets have their own speeds and whatever, and they're pretty, you know, stable, and they've been stable for a very long amount of time. And then there's this part outside of astronomy, which is astrology, which I still have a difficult part, like completely accepting parts of that, because it's basically people explaining what the influences of whatever that Venus is there and Mars is there, blah, 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 blah. I don't understand or know enough about that. But what I do know is that I can also find correlations without knowing whether there is causation or not. For example, with certain conjunctions of planets relative to each other, relative to the Earth, relative to the sun, that correlate heavily with certain events on Earth. So like for example, Saturn and Pluto, they're conjunct right now, and they like the peak conjunction. So when they're like together in the sky, they happen every 36 years. And when they're opposite or conjunct, we have historical correlation with crisis. So if we look back at the last 100 years, we can say they were like conjunct in 1914, 1947, 1982, and they were opposite in 2001, 1965, and 1931. And you know, like World War I kind of like correlated with this, with 1914, and then the rise of Hitler and the contrasting rise of Mahatma Gandhi in the 30s had confluence there. The Vietnam War, the Cold War is then heavily correlated with 65, et cetera, et cetera. So I don't know, like I'm not, when it comes to the astrology part, I'm careful. I'm careful with saying this planet there means that, blah, 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 blah. But I do keep it in the back of my mind. It's a pretty ancient pseudoscience that I will not dismiss. And based on the work of Gann, based on astronomy, geometry, etc., when he says he claims that he has further explanation to that, I tend to want to believe him and further explore it to see if I can find an edge. And if I don't find an edge, that's fine. You know, like I don't have to prove to anyone anything that it works or not, because at the end of the day, I'm using it, and people can, I don't know, take from me whatever they can take from me or learn from me. And if they don't find it useful, that's fine. To me, it has given me
an edge.
It gives me, for example, you know, like a month ago, a little bit longer ago, I posted that I was heavily expecting the period between the 18th of June and the 21st of June to become a pivotal area. I was expecting that price would have gotten much higher by now. It didn't. Like, okay, you know, like I had this idea ahead of time that is, we were gonna, if price was gonna rally up, that like the last week was gonna be a bearish pivot. But at the same time, I do realize that it might mean the opposite, and it might also mean shit. Maybe I was wrong. Maybe I interpreted something wrong. So at the basis, there's always going to be price action and other conventional methods that I do rely upon. And then I try to find as much filters based on preferably the geometric part from Gann. And I love the cycles that we work with, based on the sun and the moon and whatever. But you know, I'm not always going to be able to explain it, but that I can find correlations of significance with certain pivots in time and markets without exactly knowing what they're going to cause. Like if the market is going to pump this week up, I'll be like, yeah, see, okay, so there was an impulse, and other people are going to say like, yeah, you don't know whether that was the reason, and I don't know whether that was the reason either, but I did give myself a period of time where I wanted to be aware of the market to find a pivot in market behavior or rhythm. And if the price would have been going heavily up, I would have been very bearish, but we kind of stayed within the same rhythm. So I kind of see these moments, these pivots, as a change of behavior, not necessarily bearish or bullish, but they kind of give me a time window where I want to be more curious. And if at the same time I see an Elliott wave structure or a price action concept, or I see certain behavior on open value or open interest or on-chain volume, and I can build a strong data-driven setup based on that and narrative, that's where I want to take it. It just gives me an edge. And whether it's just me imagining myself that it gives me an edge, or that it actually is an edge, I do think it is an edge.
I guess we could talk about Gann for hours and never
yeah, let's
achieve a consensus. It is mighty interesting. Do you have any suggestion for books or YouTube videos or any type of content to read to learn more about it?
Yeah, sure. I mean, the one book I'll tell people to read, which is much more about collective behavior than directly applying it on charts, but you'll be able to dive into other books from this book. There's a lot of references in it, and it's called The Law of Vibration: Revelations of W.D. Gann, and it's written by Tony Plummer. It's not a really big book, really thin book, but it's going to take you a few times, and I recommend everyone to read it a few times. Read it 3 times, and every time you're going to read something different. But it's the most mind-blowing book I've read in my entire life. Yeah, just read the first few chapters and you'll be like, what the fuck did I just read? How much? You cannot put so many consonants on top of each other. You cannot put so much beautiful math that all correlates together. And you'll see why. You have to read it. Like, literally go and read it. Get the ebook or order it online. But I think if you've read it, you're going to be much more open to the ideas behind Gann. I mean, whether you'll be able to apply them correctly, and that goes for me too, I'm not sure. I'm just a guy trying to trade and, improving myself every day. And this book will help you with that, I think.
Getting back to the topic of trading, can you share with us what percentage you put on your automated trading and your manual trading? Because there are many offers out there where you can put your bot to trade and whatnot, and people ask all the time, like, how do you actually split the two? Like, you have an all-in on bot trading, you have all the money on manual trading. How does Jack do it?
I currently have about 50-50. And I'm definitely looking to increase the automated part, and it's doing that on itself because it's out trading me. But at certain
obviously it takes out the equation of emotion. In my opinion, I think automated trading has a edge over manual trading all the time. But that's just me.
I mean, it varies. Like, if you look over time, it has outperformed, but there's periods where manual trading will outperform the other, and by moving around allocation, you can kind of
maximize profits,
maximize it. So I always trade a portion manually, just to not to hedge the bot. I'll definitely trade what I see, but there's gonna be periods where the bot's just not gonna perform well. There's like a bunch of components to my system. Some of them have been running for nearly a year. Others are quite a bit newer, but on average, there could be like 2-3 months where the bot in USD value is not making money, and I'll be making money manually by moving profits from manual to the trading bot and vice versa based on their performance. You kind of maximize what, like you said, profit. So 50-50 for now, but I want to I would prefer 100-0, and I'll probably do that at some point.
Because you can travel right now, right? So once you hit the road, you're gonna put almost everything to your bots and let them trade.
Yeah, I mean, I literally, for my current trading, I don't really need much time looking at the market. The thing I do spend a lot of time looking at the market because I'm just reading a lot and trying to understand things and do research, et cetera, et cetera. You know, it's not just about Bitcoin, but just about how the world runs in general. So I could definitely go travel and still do 50-50 without too much effort, especially when I just trade the high time frames. Which at the very basis of my trading, I always find it most important that I do position myself on high time frame pivots to compound these, and then whether I trade in between in like the consolidation ranges that happen in the high time frame trends, I generally will if I have time, but it's not necessary. Like high time frame pivots, if you compound them and you write 80%, I think if you have patience, that just at a certain point that just starts to accelerate the value of your portfolio so hard that it should be, I think personally, should be in everyone's tool set to have a strategy to trade to the bigger trends.
What if somebody doesn't have that skill set all the time? What coins would you recommend? Like, what would be your backs for the age? Obviously, Ethereum and Bitcoin, right?
Yeah, I would probably just have Bitcoin and Ethereum. I think anything else is, I mean, Bitcoin and Ethereum themselves are already speculative. You know, if you look at them without the bias that we naturally have because we believe in this space, you have to accept that both Bitcoin and Ethereum are still speculative. They have gained a lot of traction, but they're nowhere near world adoption. And there is all kinds of things that can still go wrong. But they're by far the most established ones. And I think Ethereum has a lot of growth left. I think Bitcoin has a lot of growth left too. The others, you know, the chances that they're going to go to zero are incredibly high. And some of them will see insane returns. And I don't think it's, unless you really understand what the coins do and you really understand how to trade the cycles, et cetera, I don't think it's worth like diversifying into a really diverse random bunch of altcoins if you're just going to blindly hodl them and hope to hit the jackpot on one of them, because at the end of the day maybe one of them is going to hit the jackpot anyways, and then you're not, a lot of people won't sell the top either, so it's going to go up like, I don't know, a gazillion percent, and then it's going to dump a gazillion percent again, and people will just hodl those entire waves. So when you're just about to hodl those entire waves, I would just probably stick to like 20% Bitcoin, 20% Ethereum, sorry, maybe 30%, but I think 20% is a good allocation, and then 80% Bitcoin. I think that's a very healthy, slow-paced portfolio that should do very well, especially against fiat money in the years to come.
I like that recommendation. What do you think about the PayPal rumor about accepting cryptocurrencies as means of payments that was out yesterday?
Yeah, I mean, I don't know when the CEO of PayPal said that Bitcoin was the biggest scam in the world or the biggest Ponzi or something, but I think he said something along these lines a few years ago. Maybe it was all the way back in 2014, maybe it was in 2017. I can't remember, but it's funny that there's this rumor, and I think the rumor could be true. But what I do realize that is, once the good news start coming out, I always start to get wary, especially considering the position where Bitcoin is at right now. I do think that, and this is my belief, I do think that Bitcoin is going to go up. I think it's going to be very viciously going to go up, but I do also think it's going to be a massive drop. And this kind of news, once the market starts pumping, is going to be what people are going to tell themselves to justify their long position. And it's also what people are going to tell themselves to keep that long position or FOMO into it, et cetera, once it starts dumping again. And if you think as a whale, you're going to need counter liquidity. You're going to need buyers to sell your bags. So preferably what you do is you sell into an uptrend, you sell into buying. And the fifth wave of an Elliott wave impulse, which I think we're still missing, is usually filled with a euphoria and news that gives people the confidence to buy the top. And I think that's exactly what this news is going to be. Like, especially if we pump, I'm going to tell you 100%, that's going to be what people are going to tell themselves, why they should buy Bitcoin, that it's a good idea to buy it after a, I don't know, 200% pump since 4K. So, I mean, I think it's great, but we got to be, people call me irrational for saying that we're going to 15K or higher, but I think we might actually go there, and then people are going to be irrational about even higher. And that's where I want to sell. And I think this kind of news would do exactly that.
So short-term wise, where do you see Bitcoin?
I think it's short-term bullish, but then again, I think it's going to be also like soon after it's going to be bearish, and then you just got to buy the dip. All the longs are going to get shaken out. Let's assume the scenario that we're going to indeed see this fifth wave I'm talking about, and we're going to, I don't know, rocket straight to 16K in 3 weeks time. Let's say July 10th or 15th or whatever, it's going to be the top. And then everyone's like telling their friends, like, holy shit, have you bought that? Have you seen Bitcoin? Yeah, you know why it's pumping? Yeah, because PayPal, is launching shit for it. And then you have the news that, what's this app called again? But basically every 7-Eleven in the world, which is like 20,000 stores, you can buy commission-free Bitcoin over the counter, commission-free until the end of July. So there's like all these kind of things just to kind of help the distribution and get Bitcoin in people's hands. So I think at that point, everyone's going to buy it, and then they get dumped upon, and then a lot of them are going to panic and sell again. And when they panic and become irrational and say, like, we're going back to 5K, that's where, reaccumulation happens. And then we're just probably going to start the real bull run.
What is your crypto best and worst decisions?
My worst decision was not selling my entire bag of Dragon Chain after it went 80x.
80x? Damn.
Yeah, I participated in the ICO back in 2017, and then they went like 80x versus USD. And I remember telling myself that it was a technical top, and I sold quite a bunch, but I didn't sell the rest. But I think at the same time, that was also my best decision in the world to actually at least sell something, because I was a rookie, 100% rookie back then. And I think the best decision I ever made was just to go full time and tell myself that I was going to try and understand the market no matter what.
What are the long-term effects of COVID on humanity?
I find it very difficult to answer that question. I've read quite a few articles. I've seen quite a few documentaries on historic pandemics. And I haven't really been able to figure out whether they had long-term effects. But what I do kind of think is that for the short foreseeable future, until we really prove that we've contained the virus to a level where the spread rate, the rho, becomes less than 1, I think we're just going to be stuck, and we're going to have a government with the tools to apply heavy control. So there is this part of me that's kind of worried with all the tension in the world right now this year, 2020. It's not just the COVID virus. Everyone focuses on the COVID virus, but there's a lot of tension going on. The financial system is at the end of its debt cycle, similarly to 1929. And in 1929, we saw quantitative tightening, which made it crash a little bit quicker, I think, and bounce less high on the first kind of bounces. But and then there's, I don't know, I think there's a lot of countries in the world that are angry with the United States, and they've been oppressed as well. So there's incentive in the world to kind of have a battle for power. And there's like this law in the Netherlands that they're trying to silently pass right now, where basically the constitution gets amended, changed, to where the prime minister is going to get certain decisive power, which, I mean, allows him to change laws and make rules in a way that are potentially very dangerous, you know, especially if tension is going to rise and there's going to be people who are going to be polarizing the entire society, which, I mean, there are in the Netherlands, there's everywhere. Everything is either, everyone is kind of like extremely left or right at this moment. There's no one in the middle talking, you know, everything is polarized. So, you know, if things don't become better this year, you kind of accept a law like that, and some kind of very extreme, you get some very extreme prime minister who's, I don't know, racist, who wants to ban all the immigrants that we brought to the Netherlands ourselves. You know, I don't know. That's a very scary situation that you know, it's not impossible. And it kind of reminds me when I look at Trump's rally in Oklahoma, the things he said and the things his son said. His son called all the BLM peaceful protesters animals. You know, that's kind of like, it's so it just reminds me when Trump is speaking there, like how certain other historical figures talk. It's scary. So I hope we're gonna survive it without any war. And then I don't think there's gonna be long-lasting effects of COVID. But if COVID is somehow gonna trigger it into like I don't know, a world on fire, then, you know, it could attribute to a very long time of depression, I guess.
And with that thought, we end our episode. I am very honored to have Jack on Point Blank. Thanks for coming on, man. Can you tell us where we can find you?
You can find me on Twitter at BTC_Jack Sparrow with double R. And that's probably the only place you're going to find me. I want to thank you too for the interview, taking your time to create the questions and go over them. And I really enjoyed it, man. Thank you.
Thanks, man. Thanks for listening. Until next time. Peace. This episode was brought to you by PrimeXBT, the exchange where you can trade without KYC on legacy markets with your Bitcoin. You can trade commodities like gold, silver, oil, even indexes and forex. Join now and get a 50% bonus on top of your deposit for trading at u.primexbt.com/Panama.